Yeah, I just pushed the button just now. Thanks. So the price can reverse as well. So don't look. It's just a matter of like we need to. I mean, where is the low? You know. So back to this, we need 3 days of higher highs. Then we can say like, okay, yes, the energy. We can call the low right there. We don't have that yet. So de-risk is the one to go and just trade less. I only traded like what nine trades this month. I don't trade that much this month at all, as you can see it. I clean up the garbage from last month, February. I was like, just get rid of it and just stayed on March and just, leave the way it is for now. And that's it. Not gonna throw a bunch of trades and that's all I had. I tried to did a um SPY yesterday to see if we can get a bit of a bounce from the S3. We're right there. I mean, which is the last 2 hours. It's just a complete wastage of time. The puts and calls are just getting toast. The write-ups. So usually from S3, you do get a bit of a bounce back toward like 9 or 20 EMA. But yesterday was just everything is just act like, I don't know. PC market has never moved that much on a CPI day, but it's moving now on the PCE data. Just something to really look like consider. Like really. Um, Going back to a bigger time frame, we can do it here, but it doesn't really matter because this is the initial decline we just had down to 5504. Let me turn this thing to the left side. Okay. So 5504 off the highs right there. So this is a three. This is a three. That's all it makes that connector X, right? So this is a W, this is an X. So we have a Y to go. So this Y right there is the same thing here. Same W, same X, looking down in Y. If this is all of X, well, we're gonna find out when the low is gonna get taken out. That's the only answer that I can tell you. If this X is here, or this X is gonna make some one more, gonna make room to the upside. That's another thing because X is just it's a zigzag move anyways. So this is why I'm left it like this: 5 3 5 3, and we just look for another 5. 5 3 5 3 5. So this is a scenario right there as long as we hold this low. Basically, that what it's going to be is going to be a connector X. So basically, this X right there is going to make that room here. Then we take another 3 to the downside to complete this Y. Because to me right now, just all is a bunch of zigzag moves. So if I do it here, or if I do it here in a 20 minutes, it's going to be the same thing. It really doesn't, it's not going to change. There's no point for me to just look at a one single bar of one single day. But the same day right there, I can actually count the whole 5 down on a smaller time scale. That's the only difference between different time frames. But it doesn't change anything. It's the same thing. If you look at a 1 hour, so if I change this thing to a 1 hour like this, come on, change what happened here. Come on, motivate, man. You just So if you change it back here to any time frame, doesn't mean it's going to change anything. It's not going to change anything. It'll stay, everything stays the same. So if you put a 20 here, if you go down to a 15 minutes, or if you go up to a 2 hour time frame, what do you think? Here, so oops, let's take that long. What has it changed? Nothing. If you go to a 30-minute chart, it's the same thing. Motivate is kind of goofing around. So it really doesn't make any difference. You can go up to 15 minutes. It's just each bar is 20 minutes long. So if this is all of X, I mean, I mean, yeah, it is acceptable, of course. I mean, X normally retrace close to the 50% retracement anyway, just like a B wave. So, and then we just have to, that's why I draw these two zones. Okay. Now, the question here about the timing and this and that, I mean, look, when the timing comes into an Elliott wave count is a very advanced Elliott wave. Okay. Not too many people do that because when people don't, a lot of people don't even understand like how to run the time confluence about certain swings with the whatever the wave structure are. This is only a guideline anyways because Elliott has not spent any time working on the time relationship between the waves. It does come handy sometime will not. But it works if you have the right wave count that will give you the price and time relationship. It's the same thing happens here. I just showed you before. This guy right there has spent years working on time. Elliott Ralph Nelson, he didn't spend any time working on a time relationship between waves. The wave structure is a little bit more complex than the Gann swings are. Okay, so he actually laid out several market cycles as well. There is certain dates. That's what you look for is when the market can change trends. It doesn't mean that it's gonna happen on that day, but it's just the data that he collected over the years while he was trading is that's when he thinks like, okay, yeah, these are the certain days and months and the quarters is when the market comes to the certain point is this when the market will change direction. Which direction will nobody can tell you that answer. So it just this part right there is what I have here is a 100% relationship of A and B. It works because I know how to count. So the time is going to come into a play one way or another. It was right here at this bar. So this is basically a C versus A. So the C versus A, how does it work? So you have distance travel here in A and B and C, which is right there at 100%. So the 100% price was reached here at 56.84 on March 7th. Now, when you take a time between A, B, and C of 100% time relationship gives you March 12th. This is the price. This is the time. What comes first? Either a price is going to hit first or the time is going to hit first. It's either or. But when the price and time will meet, price is going to show you a response. Like, okay, fine, there's a relationship has been met. Now, look, expect for some sort of a bounce. Did the bounce happen? Of course it did. The next day. That's how time and price relationship works. Can you open a position here at 100%? You can, but then you're going to have to take a punishment for 1, 2, 3, and 4 days because the 4 days, because your time is not up until March 12th. You enter the trade on March 7th based on the price. Now you because you got a measured moves, A, B, and C. You just have to wait for the time to complete, not just the price, because time is important, right? But at the same time, nobody can time the market. But you can come pretty close. Now, if you buy something on March 12th, okay, you already know the price has met, okay? So now you're thinking like, okay, well, we came down, price hit this price, we got 56.84, so 100% relationship is met, but I'm still off by another 4 days on my time. Should I wait 4 days? Okay, let's say you wait 4 days and you buy something on March 12th. You have a reward? Of course you do. Did the market show a respond back to the upside? As you can see it. So then you can just take the same, because now again, it can work here as well, but it's going to get very messy because smaller time frames are can work, but sometime it will not. There you go. That's a 100% right there. Right there. So what happened here is your low, initial bounce, retracement down to 50%, up in up the C versus A. Your time relationship was one. March 25th at 10 o'clock in the morning. Was when this bar was completed on that day. I mean, nobody can know this, but did the price roll over from that day from this high? Yes, you can see it. So this case, what happened? Time came first, not the price. So the point is what? The point is that the time relationship on Elliott does work if you know how to count the waves right. And you're not going to count those waves right unless you have. Oh, there you go. You see how CNBC just throwing out these breaking news? I'm telling you, they're working overtime right now. What is this? Young Americans are losing. I just got the the alert on my phone. Young Americans are losing confidence in the economy. It shows in their online humor. Doesn't pop up here. Usually shows the breaking news up here on the top. They're gonna make, because I know CNBC is working overtime now. So anything possible they could find is like this is gonna become everything is gonna become a breaking news right now. So the VIX said what 21. So went up what 2.96 to almost up close to 3 points yesterday. It was at 28 at double top. 2% here, 2.7 here, a little close to 2%, and then 1.69 here. I mean, that's a huge move for a one single day. I mean, 2% decline is definitely huge. But the thing is this, like, what's going on here? The thing is, the thing is like S&P is not gonna run unless this moves. That's just the fact. They can dance around here. I mean, it's a tech-driven market. Mag 7 is what drives the market, that drives tech. protectorize the S&P. If you sit in like thinking like, well, the value stocks and those low cap market cap stocks not going to be able to move the overall sector anyways. You need big players. Okay, so if we go back here to a seasonality, what do we see here? This is the March. That was January, and we're just down for 2 months. February was down and March was down. Okay, so we have a long time to go. Okay, and then looking at seasonality since 1975. Okay, this played out. This one didn't, or this month either. So there's 2 months seasonality right there based on what's going on right now. It didn't work out. April is the second strongest month of the year after November since 1975. Just keep that thing in mind. April is a very strong month. So we're only down 2 months. Are we gonna see a bounce, a relief rally, whatever the case we can make? If I would consider I'm just gonna give you all the options. So if we would consider this going to the wave count here, we would be just looking at basically this this scenario. So because if we look at a time here, it basically is going to start right here. No, sorry, March. Oh, we still have Monday to go. Okay, it's going to move because right now is in a weekend. So the April starts here. So this is going to be. Oh, this time will adjust on Monday. It's just right now because of the weekend. The time right there, you can see right there, is still running. It's moving. They're logged in. Um, this is going to be all April. So the point is like if I looked, there is some one guy, I don't know, I don't think I could be find it. He has a little bit of a different seasonality chart. I just kind of came across, just kind of looking at this morning. Um, I don't know who was that. It's the same. It is the same seasonality chart, but it's just his has a like pointing down toward the March lows, and then from there the price starting to recover back up. So I don't know where it's just doesn't matter. It just so April right there for next month. I mean, month is done anyways. So what are you gonna? I mean, where we are. This is the extreme from peak to trough. Okay. I mean, we can do next. Here's a. We can do the year. No. Yeah. Pretty cool way to look at. We're off this is called extreme range. No, we can do not a year. A year is or off 9.22% off the highs, and then we're up 12.67% off the low. So you can change this thing to a year, to a month, to a week. Week is here, and the week is not going to show because in a monthly time frame. So it's just a month. I'll go year, year. Previous year. Doesn't matter. Um, this was last year, a year before, the low here and the high here. So, or only what here January as February. Sorry, the January, February, and March. So that's the 3 months so far. These are monthly candles. That's a big one. So if you look at 8.4, so 8.4, that was 543, 5.9, 6.6, 5.4, 6. See, we haven't had any um, bigger range monthly candle until until this month, until March. So definitely that's where the most, the volatility was starting to priced in after this was 3 months of dips, right? These are the ones that are the one of the best buying opportunities when you get something like this. S&P, you're not gonna see. I don't know if somebody can show it to me, but you're not gonna see 4 months of decline on an S&P 500. Third month, if you end up putting a low, that just start buying. Look at the bounce. Yeah, you don't. I mean, I don't know if you're gonna do another month down. I mean, that will put us into an April. Yeah, something like this. Yeah, you don't get to see it. This is a 2022 right down here. See, two down, bounce, two down, three down. Look at the bounce right there. 11.25%. That's huge bounce after 3 months. Another three. See, bounce back up. Yeah, if that doesn't happen, those you talking years back, something happens like this. If ever something ever happens, meaning that the S&P 500 is down for 3 months in a row, that third month right there is the shopping month. You know, we'll definitely buy calls. Just leave it. Wait for the next month for the reward. It's gonna come. So, well, it was a bear market, of course. 2022 was a bear market. 27% decline from peak to trough. But look how the price rebound. Don't look, I mean, yeah, the damage is gonna get if this is the punishment that everybody's taking, look at the reward. Full full V, call it a V or call it a round bottom, doesn't matter. Look how my market recovers right back up.
Only if you have cash to buy at the bottom.
Correct. So that's what I'm saying is the best approach at this moment is to de-risk and either trade less or trade small. You know, once the premiums, kind of the volatility, the dust settles, for me is all about swing to turn up first. Once the swing turns up, I'm gonna start sizing up trades. But we don't have that yet. It's gonna take days for that price to kind of, playing bounces. Yeah, I mean, those are just to us right now, they all looks like the short-lived bounces. That they're coming. It's not like we're just flushing down in a straight line. But the point is like how only two of these sectors got hit the most. Technology and, consumer discretionary. This is where all the Mag 7 stocks are. Here's your Amazon and Tesla on XLY, and the rest every here in XLK. Microsoft, Apple, you name it, like Meta, like all of them are here. Comes into an XLK, the technology. The communication, yeah, the one right there is the Google, Netflix, and Meta. Rest are all good. To me, what it looks like that these stocks that this the the Q1 was nothing but to cool off semis and tech stocks, which they had a huge run last year, including so especially like the Meta and all the others, like all the stocks except for Microsoft. Microsoft is just literally a dead money right now. 'Healthcare 5, 3, 2. Financials are a little less than 2 now. It's just, I mean, it's tough to say, but this, more and more, I'm looking at this, okay? Because right now, if you take a high and the low, 78.6 is at 6,000. This has to break to take out the new high, to make a new highs, to get to 127 and 61.8. So we have 6,000, 63.33, and 65.78. There's a lot of people on the Wall Street, a lot of firms, they have a price targets of 63 and 6,500 right now. Some of them has 62, some of them has, it's all between 62 and 65. Most of the firms out there, they have the yearly target. If that's the case, I think if we calculate time, it doesn't really, if we rip, I'm just saying, okay? Let's say we do this quick toward this zone right there, toward this the X versus Y versus X, right? Well, I'm sure it's going to take some time to get there, but you're talking this. So how much of a time that you can draw here for 5 wave to complete? Because 5 wave impulsive wave, well, first it has to make a 8 swing, something like this, 5 up and 3 down. Then it has to make this move to the upside. So basically, same thing, 5 waves up, 3 down. Then we have to target this high right there. This is where the third is going to come into a play. That's where the third goes. You're going to have those acceleration gaps, at the opens. And then this is when the price moves. So then we got the fourth wave. So it all depends how the second was, that to make a case here for a fourth wave, how it's going to go. Then you look for a fifth wave to the upside. toward these prices. That would take, this will take months, not days, not weeks. It will take months for this thing to play out. It depends how sharp we. Now the point is like, how is this tariff policies and things like this is going to affect earnings? Well, we're going to find out. If we don't go up like this, well, we just stay like this all year long off this low.
Well,
Yeah.
do you have this, can you pull out this quarterly layout for 2022?
Quarterly.
Yeah, because I want to see how the sectors performed. In my recollection, the healthcare, did well in 2022, I think.
I have to, I have to, I mean, I can do it, but I have to make changes.
Yeah, in 2022, of course, those, the growth stocks like tech sectors, consumer discretionary, industrial, they went down so badly because, it was so painful because my portfolio is skewed towards those growth stocks and I had to see all my portfolio shrink, in
Yeah.
2022. So, but,
Growth, growth is where we have all the alpha, this is definitely, will make money on trades. I mean, what
yeah,
drives the market?
in a bull market, of course, the growth
Yeah.
stock, have a much higher alpha. But, I'm curious to see how the sectors behaved in 2022.
I mean, I will post it. I need to change because you see right there is 2025. I need to script this thing back to 2022 for each quarter, and then it's gonna load up that data. So I will post it on the chat room. See
Thank
right
you.
now, if I go here, you see like it's calculating between the only 3 months. So I gotta change these dates backward back to 2022 for each 3 months. The range starts from January, from January until end of March. So then it's gonna start loading up the data. So I'll do that.
Thank you.
Sure. It's harder to play yeah, because when the spike in volatility is just where premiums are just not, you know, helping much because the Vega hurts those premiums. So the time decay is the one is it's gonna come overnight, basically is per day. Holding those premium is just the Vega is the one, the volatility is the one attacks all these premiums. So those calls gets hurt. So the short calls are the ones that take the advantage. But then when you get the spike, whatever the rally that you get, then it goes other way around. I mean, if we had 100-point move to the upside as well, you know, that way you think holding a puts on 100-point pop is easy. I mean, it's just, yeah, hold puts and suffer 100-point reversal to the upside just so set for one single session. It's just, it's again, it's very easy to put it out, everything. Yeah, do this, do that, do this. Yeah, put real money on the line, then we'll talk. It's not how it is. I mean, I just said before, like, I'm, I'm, like, I want to trade and I will trade. I mean, it's not like one, few trades went down doesn't mean the next 10 will be the same. It's just like I don't see myself making $1,000 paying $1,000 debit to make $800. That's just not a good risk to reward or the right way to trade. You know, I want to I want to structure a spread where I have a reward at least 1800 to a 2000. Risking 1x to make 2x. If or or you can do 1000 to structure a trade to make 1000. That's a 50-50. That's one to make one, right? You risk in one to make one to you risk one to make another one. This is the way to trade, one to two. Any risk reward ratio that you look at, I mean, what you tell me would make sense. Does this make sense? Of course it does. I would never take trades like these and these ones. That's desperate trading, to be honest. Because in this case right there, if you, it depends like how the trade plays out. I mean, if you manage to hit $1,000, that's 100% return on the money, right? So if you have a $2,000 max profit on a spread, the way you structure it, and if you manage to make a $1,000, you tell me that was a bad trade with a 100% return on the trade. If you got a big, huge pop and then the price manages to stay up, what else do you want? People are making 20, 30% on average. Yeah, it doesn't happen often, but I'm just saying it's just what if, right? It's a probability game, right? So if you have a risk to reward from 1,000 to 2,000, you have a much better odds of at least making you to double the premium that you're holding. You have a lot less time decay, and you just have the delta that you have, and you just have to see if the trade setup was right and if the if the wave count is still valid, and then see if it goes where you want it to go. But the risk to reward has to make sense. Just buying calls and just throwing puts. Yeah, I mean, of course, like yet yesterday ODT options depends where you bought them. Of course, they went up 300 or 400%, even some probably even more. You could have 100-point move to the downside. I mean, a $10 premium could probably worth, I don't know, 5 times, 6 times. So $1,000 you can like almost turn into a $5,000. I mean, those are ODT options. I mean, yeah, they're just completely gonna flushed out, or if they're just gonna flush down, yeah, the reward is there. But we just had a flat open, you know. So until all the there wasn't any tariff news yesterday. It was just all about market just react based on the PCE number. I mean, just never seen PCE number sell off like this, to be honest. This just makes the most sense. This fourth wave, it's gonna torture us for some time. That's how I see it. They're the most nasty corrections, especially in a fourth wave. What this whole thing turns into a triangle. Think about that. What if this whole thing, this is because these are all bunch of zigzag moves anyways, what your triangles are. Triangles are all zigzag anyways. What if something goes like this? Oh boy, that's gonna take months to complete. We don't know that yet, but I'm only making a case here of just the complex, because all I see right now is just these bunch of back and forth zigzag moves. They're measured moves. They're working out pretty good with time as well. So I don't know about the C wave, because in order to get a C bottom of this Y, I need to see A and B first like this to get the C. So we don't have that yet. So I mean, we're just gonna have to fight these ones here. So we'll see what happens. Um, Monday, I'm I'm hoping that just kind of get a bit of a test here of this 55.63, and then trying to make a bit of the bounce back to the upside. Just we'll see how this 78.6 on a cash when market is gonna open, how this thing is gonna manage to we're still off the lows here. What is it? 1.38%. Okay, so it's roughly another 100 points. But it's like, I don't know, 80 points so far, but 1.38 on S&P is going to be 2.7% move on the NDX cash. Just keep that thing in mind. So you can look at these averages here. There's 2.7, 1.9. Okay, so this one, so the basically what it is roughly a 72 points. So the percentage difference. So technically what it is like if this goes down 500 and three, in three, because you have to look at this, but this is a decimal after a comma, or depends if you're still on a metric system or not. If this is a comma after two, this is a comma after one digit, right? So of course the 17,000 versus 5,000, that's a big number difference, right? So the decline on these ones always going to be in a higher percentage because the number is big. Same, so if this is 2.7, call it 3, call it 2 here. So it's roughly a 1 point extra, a little over 1 point difference decline between the tech and this. So meaning that if the tech comes down 3%, this gets hit by 2%, the downside. So it's 2%. So if we take this to this as 1.38, so we'll see what happens on Monday. This is where at noon time is when the pension funds closes and the new money comes into a play at noon time. That's when they close their books. So we'll see what happens. It might be if the new money is going to come into a play. So we're going to see and how the April is going to play out. It looks pretty promising. You never know, things can rebound. So it's just a matter of staying down another week and then make the move up, which I will show you a very interesting chart. Um, that is the possibility as well. So if this is the case, okay, that will, I mean, the only way for this thing to move up in a 3-3-3-3 move, I mean, if this thing can turns into a leading diagonal, you know, that is possible. But those are the same painful, very painful to trade. 3 up, 3 down, 3 up, and 3 down, it's called leading diagonal. It's a five-wave structure, so you got 1, 2, 3, 4, and 5 to complete one. Then you come down and for another 2, then you go up. So that sucker is going to take a lot of time to complete. Diagonals and triangles takes very long to complete. But, it's a possibility. Always have to think different ways. How we can get up in 5 and 3. We need 8 swings. I was really hoping that because as if you go back, because I changed this thing yesterday, I had this as a one, two, smaller one, and I was looking for this smaller two. Remember, this is what I had. So I have 5 up, 3 down, 5 up, 3 down in a small. Then I will say like, okay, we can look for this third to move back up toward this zone. That's what I was looking for. It didn't happen because we broke this damn low yesterday toward this. So we'll see what happens on Monday. So I can, because this, I mean, if we make a new low, the number will drop. Keep that thing in mind. The number will drop is going to give you a much bigger upside as well. You always remember one thing though. If the market is down 10%, it's going to be up more than 10%. Keep that thing in mind. If market comes down 12% off the highs, it's going to go up more than 12% in return. Your upside is always more than your downside. Market can come down 20%. It's going to go up more than 20% with more time. Because if your initial decline takes, I can show you on a different time frames. If your initial decline takes whatever the decline is of 30 days, when you have a recovery back to the new highs right there, it will be more than 30 days. Your time and your price, the magnitude and the length of the upside move is going to be greater than 30 days, not shorter. Market will just take a pause here. We'll just keep buying time, but it's going to be more than 30. But it will. That's you looking for is for the price to make a new high, but it will complete more than 30 days on the clock, and it's going to go and hit the high right there. Always does it. And this is all of these moves right there. I mean, you can measure them. Let's take this one. I just show you this one quick. Let's say you take this high to this low, 14 bars. So there was 14 daily bars. Took 2 weeks. So let's do this low to this high, 15 bars, 15 days. Retracement came down here. So it took 1 extra day. But didn't make a high yet. Remember, the high was taken out here. Let's do this. The high was here. So you take this until how long does it took to reach the high? See? 31 days. It took longer than the initial decline. Then when you took out the high, look what just price went up, retested, and then price can extend the time out now. Because the price has not retraced below this 56.69 for a very long time until here. This is the major support right there of the market. If you look at just the price on a chart right there, this is your major support. Why? Because this is where we had the initial 10% decline before. This is 10, this is 10. So I have two tens here. This and this. They're both at 10%. This is the August low right there. So the right now, call it a pivot. So any time when the price comes back, is gonna fight that area. See, down, move up, came down again. So whatever the call, and if whatever calls that you would want to buy or you want to consider buying is a 566 on a SPY. Okay. And then 5670 on S&P. These are the two strike prices for any bounce out of the money with time that will pay huge if you happen to get, if the price managed to get a reversal back to the upside. That's the number right there. So from 58.80 to 56.7, that's almost a 90-point move. Huge. I mean, depends how you size up a trade. I mean, not to catch a 90-point trade on S&P, I mean, it could make your entire week. It's not easy. It's hard, but to catch 90 points is huge. Then just remember this number. This is every time when you have your previous largest percentage decline, that that high right there is your something you're gonna watch this one. It's gonna come back and retest it. It's gonna come back to a retest if it's gonna get it's gonna get taken out. That's what happens right there. Broke below, put on low here at 55. Price came back, backed off. You see, completed this. I mean, can we call this an X? Yeah, I mean, are we doing this? Looking at swings on a weekly time frame and looking at a daily time frame. This one definitely does looks like, yeah, we're just into this first initial move down here in A anyways, right there. So we'll keep this one for now. This part. Go toward this 5. Then we'll look for some sort of a bounce back in B. Okay. And then another leg down in C. So to complete this Y. So this can happen, I don't know, next week or two. Now, coming back here, this one, very interesting chart. A lot of these bottoms were placed because I every time when I see a blue bar, I just go a bit neutral and I watch the next bar really, really closely. See what happens. Okay. Inside bars are just neutral bars. These are the ones that are very sneaky bars. Okay. What I mean by that, they forms a lot of time. They forms a top and they forms a bottom. Okay. And I've seen a lot of stocks over the years that this candle or bar, an outside bar, it forms on a very top after a huge run, and then when the price will start to back off. And the same thing when you have the initial decline and the price goes all the way down. I mean, right now it considers like a bearish, engulfing candle, if you want to call that one. But it's a very tricky one because it can make a real crazy move back to the upside. So what I mean by that is this. This is a weekly time frame. Okay, so we're gonna go back a couple of years because you don't see these that often, first of all. Okay, because price really don't engulf that as much. Either it's gonna be red to the downside, green to the upside. Mostly you see green on the screen, or the black ones that just stay neutral in a choppy zone. So we even had neutral bar a week, okay, for until here. Okay, so it's been a long time. So the week we just had, we just engulfed this one, right? Because we took out the last week high and we made a new low as well. Look what happened here. This one. We made a low, sharp reversal back to the upside. So that's one. This one forms here on a very top after this huge run, and we have 3 weeks of a decline down here. Okay, that's what forms on the top. Look right here, coming down, outside bar, lower weekly bar. Look at the reversal. Same thing here. Look at the outside bar, lower weekly bar. Look at the reversal. Same thing here. Huge reversal. I'm telling you, this bar right there, wanna watch this one really closely next week. I want to see next week how we close this because what has happened here, two, three, see, and there's a lot of time this happened. This is a very, so it's a very sneaky bar. This one right there had two of them next to each other, right there. Okay, so then we had two more down weeks. So that's not the point. I'm not comparing two outside side by side. So I scripted these ones here. We're looking for this one, this one, okay, this one. This is back to back. So this is outside, outside, inside. That's this crazy price action right there. That's 3 weeks is brutal to trade like this. This one, this is the outside with the lower. There's a three of them here. One here and one. This is to the downside right there, forms on the top. And now we just had this. This is what I want to see. Because we had a low. This is why I wanted to leave this as an option here to see what happens here. I want to see this. I want to watch this zone. That's what my plan is. Okay. This area off this low to this yesterday low. I want to see what happens here at 78.6, close to it. I want to see this next week, what we're seeing here. You see, like, what was the open was 57.82. The low was 50. Sorry, the open was 57.82. The low was 57.73. And the high was 6,014. So you take 6,014 minus 57. That's a 241 point reversal to the upside in 1 week. So let's watch. Let's see what happens. Okay, market is very fractal. This is what I always looking for these kind of symmetry. symmetrical patterns. Like what happens here? Okay, so let's see. This is the bear market right here, 2022. In a bear market, you see, well, this was formed at the bottom. Keep that thing in mind. There's a difference. Something that that forms on in on not at the lows. Okay, so you see, you put a low here. Look at the bar here. It's huge, massive reversal. See, this is right in the middle, not at the very top. This was the very top right there. You see, this has actually started the bear market right from the top. This just have to very pay attention to these bars because they engulf, right? The price moving up, you need higher highs, right? So then the price moving down, you're looking for lower lows. These are the sneaky ones that just they move up and down, meaning that they take out the previous high and lows. So let's see what happens. You know, to me, what it looks like next week, we're just gonna we if in order to repeat all the previous ways that what happens here is to put up another low, and then from that low right there is just where you get the bounce, and then we'll see what happens from there. So anything can happen because these are crazy reversals. If you look at them, look at the size of this bar. It's huge. I mean, how much is this decline? 11%, close to it. So if we go back, let me do this here. Let's do this. Now you're looking better. Let's put a swing here between to the same percentage. Okay, now watch. So we have 10.5. This was the initial swing was down for almost 4 weeks. Not here, this one. 10.9 to 10.5, 10.9. And that happens. Watch this. Lower weekly bar, higher weekly bar, lower weekly bar, higher weekly bar, outside bar, outside bar. Look, you see, an identical match is right there, side by side. Right there. Look, GAN has a very interesting bar to bar relationship because some of you don't know. See how it works? Like identical, same, these are exactly the same bars right there. Down, up, and engulf. Down, up, and engulf. The next one here was lower, and then we made a full reversal back to the upside. So I wouldn't be, to me, if I have to call, I think we're gonna make a low tomorrow. It's already done on Monday. Okay. We just might come down and hit this area real hard next week. And then the next week from there, which is you're gonna be the April of second week. Okay. Because so the thing is this, once the bar turned red, it remains red for the whole week. It's just not going to turn green anymore. It's just going to stay red. Then it's just a matter of where it's going to close the week. You already had a new low, okay, because you already break below the previous week low. So the low is it's a new low is recorded now. So for by Friday is all about the close now. So the only thing the red bar, it remains red. It can turn into a blue bar, meaning that it engulfs. So back to back like this. So you have a high here, you have a low here. Then the next week comes in, you made another high and you made another low. See, they all becomes blue and blue. So then from here, so this was the high of this day, this was the low of this, and then you open up and then you made another lower low. You made another lower bar and it remains red. Because this one, you don't get three outside bars in a row anyway. That's just really, I mean, 4 weeks, four weekly bar makes 1 month anyway. So I want to see what happens here. So I was looking at as you know, 'cause I pay attention a lot to these price patterns. Like what happens here? So we have lower bar. The point is you have to look at this. We have an initial decline of 10.5. Okay. 9.7, 10.9, and 9.2. And this was a 19.3. This is the bear market low. Okay. So we have a lot of these swings right there. So now the point is the highest swing that we had so far is the 10.9 from 2 years, from the last 2 years. Okay. We haven't had any. It's 5.4, 3.1. The swing is down. As you can see, this line right there that merges to the downside. The swing is down. So if you just want to lay out your simple way, the levels of whatever you wanted to do, here's your resistance at this prior swing low. See, that's exactly where the price just backed off this week. This is your support. We just talked about this 56.69 because this is where we had a 9.7% decline. This is the low we just put it on the March 13th, 55.04. And then from here, we don't have any other downside comes into a play until pretty much here, 52.64. That's this swing high. And then this swing low is this. And this one goes down to this. You just mark the swing where the actual swing turns up and down. Those are your prior support and resistance levels anyway. So I don't know. Could be weeks and weeks of beating. I mean, unless we're talking something like this, that's the only thing you can make that case to the downside if we have a 20% of drawdown is coming. That took what? 1, 2, 3, 4, 5, 6, 7, 8, 9. This took 9 weeks. So 9 weeks, that gives you 4 and 4 is 8. That's 2 months, 2 months and 1 week. That's the largest percentage swing to the downside at 9.8. This is 12.9. This is 17.8. So these are the two largest ones that we have. 19 is the biggest one, then 17.8. Then the rest are 12.9, 14, then 9, 10, you know. So the only thing is, I mean, if we're looking weeks and weeks of selling, well, I don't know where we're gonna find, like, I don't know, before earnings and stuff, the market's gonna sell out that hard. No, I don't think so. I don't know. I'm making I mean, I could be wrong. I think this thing's gonna happen. This. I want to see how the low is going to get taken because the previous lows on all of these ones, you see right there, it actually made a new low. Same thing here. This case, if this happens, I mean, you can make a case of an expanded flat, meaning that this B wave comes down like this, and then it makes a reversal back in a C wave that becomes a flat. That's the possibility. So meaning that this comes all the way down here like this, I'm gonna have to readjust it. So you have three up, three down, but then B goes, takes out this low, and then from there, the five waves up in C wave called a flat. That's how I see it. I mean, to me, looking at these relationships, that's what it looks like. If I have to put it with the Elliott, but the swings has to turn up, man. We just don't have. We don't have. This line is to the downside. We need this line to emerge to the upside.
Well,
Yeah,
can you go back to 2021, 2022?
right here. It's 21 from here. I can do this. It'll be much easier to see. There you go.
For me, I think that, the topping pattern that we saw at the end of 2021 to the beginning of 2022, the pattern looks quite similar to what it is now on the weekly chart.
This one, 22.
I mean that, the end of 2021 and the, beginning of 2021, the topping pattern, that looks very similar to what we had at the end of 2024 and, beginning of 2025.
Oh, yeah. I mean, if you look at, you're comparing this to this.
Correct. And also the run up to the, the before the 2022 top, it looks very similar too. So if you scroll to the left a little bit further, shrink it so that we can see both 2021 and 2024.
There's a 24. I mean, if you comparing, yeah, I mean, if you're comparing these two, yeah, I mean, this part and this part. So you basically, because but what you're doing is basically you just like you just take these two highs, okay, and you just merge with these two highs. That's it. It's gonna give you a same look. 'Cause that's almost a double top right there. Not here on this one. We slightly move higher, off by 47 points because the 2023 high was 6,019. I'm just making 6,100. This one is 6,147. So the 47 points. This one was 10 points. 4808 versus 4818. Okay, so now if you compare side by side, thinking like, okay, well, are we going into a bear market? Well, that's a tough call to make. So if that's the if we're starting into a bear market, then this is the first initial dip that we had, okay, as a starter. And how much was it? Okay, let's see. Want to compare patterns? You can compare. It was 14.60. So we have 14.60 decline with 12.70% upside. That's a lot. Okay, that's a lot. So if right now,
E2 was like a psychopath market. It goes down 15% and up 10%. But I think that the initial leg down was, the one, two, three, fourth candle after the
yeah, you
top.
can do this one was
Yeah, I think that
12,
was, yeah, which is close to now. And then, it bounced like 10%, I guess, or maybe less.
8.82. So that's a 4 weeks. So there's 1, 2, 3, 4. That's 4 weeks. So there's 4 weeks of selling, 12.36. This is 3 weeks because this is still on a higher bar. So we put a low here already at 55 of 4. We got a bit of a bounce yesterday we engulf. So went to 8.8 and we went up 5 here. So market is definitely trying to recover at least half the nightmare, which is a matter of we hit a 12. So if we do 12, okay, that put us to, if we do a 12, 5390, like 5400. Okay. That 5400 is the same zone of this 5400, 5409, right there. 5550 is the midpoint. Upper is 5691. From basically, so we're right here in the middle.
Yeah, and also that matches your, wave uh, Y.
I know. Yeah. This one, this, this
Right.
zone.
Right.
Because this zone right there is where we got the bounce. Because I have to extend it so you can see it better. Take this low and this. Now this. Take this zone 5580 to 5490. See this zone right there? It helped because I did this with the time and price along with this ABC decline. So this is where we just got the bounce. I will do the same thing here as well, but it all depends if we're gonna take out this low or not. If you would ask me, I mean, I know, I mean, anything is possible. It is fine. But this X-ray is very short. You know, it's right. I mean, there's nothing wrong with that, but it's very short. Normally, X-wave kind of chew a bit more time because the complexes are not as a as a flat or those ABC zigzag. Complexes are kind of little nasty little corrections. There's a lot of bunch of zigzag moves. In 2022, they were short too. Yeah, well, it's true.
So I think it's S SPX is gonna hit somewhere around 5,400, I think.
If that's a downside zone right there. What
Uh,
I'm planning to do is to I can't spreads are just to set up a butterfly, a bearish one. We can tilt it more to the downside. What I was planning, and I was trying to pricing out yesterday, but it's kind of almost getting all, we'll put a hedge um at structure a butterfly at 55, like buy a call at 55, sell right there at 54. Oops. Okay. So you sell the 54. So you buy the 55 this low, you sell two of them here at 54. And then if you're going to do 53, it's not going to give you any delta, okay, because it's going to be an even strike. So we got to tilt a little bit, kind of gives a more bearish tilt to it. You can just do 53.50. So this way it has more tilt to it. So it will have 55. So sorry, 54. That would be the hedge I would consider to the downside is to come down here toward this 54 area. So you're looking at 55, 54. That's 100 points. From 100 points down to 150, that's a 50 points. So your butterfly is gonna have not oops the so your butterfly will have a tilt like this. So that's gonna be 55, and then you're gonna have I'm just gonna 54 and then 53.50. So that's how the butterfly is gonna. So we're sitting right here on the price, which is 55.80. So the price trying to travel here toward this 55 low to target this 5400, which is the body of the butterfly, and then anything down here because this will bring deltas on the table. It's going to have a positive theta, but it's going to have deltas. Now, if you will make a balanced butterfly, a 5500, 5400, and 5300, it will be a little cheaper, but you're not going to have deltas because you're out of the money going in and with a balanced strike. 100 here, 100 here, and 100 here. You just tilt it. Tilt meaning like you just gotta have to, if you're gonna bring more delta, you lose theta because now you're more directional. It's the same one that we did last time. But that just played out so damn fast. I wasn't thinking like it was already went to maxed out. I mean, because the downside is maxed. So looking at this, I mean, I think we just attack these strike prices. That's the only way you're gonna do it. I mean, I can do it on a SPY for you as well. You can see it here. The SPY strikes, that is 539, 553, and 567. So the same way, if you don't want to do the butterfly on the SPA, which is going to be a little bit pricey, of course, and play it on a SPY. So the SPY would be 555, 539. You can make around it to 540. So that's a what, 15 points here. And then from here, you have to either adjust it to 535 or you can do 530. So that makes it 10 to the downside and you have 15 to the upside. So if you're going to do 15 spread to the upside and 5 to the downside, will definitely going to bring more deltas on the table. Okay, because now you're more directional. So you have 15. You know what? If you do 15 versus 15, you buy a call here, and because all you're doing is just you buying two calls and you selling two against it. Okay, so the broken wing is just like you can tilt it both ways. You can make it bullish, you can make it bearish. These are the best strategies. I mean, I don't know.
Wait, buying puts, right? Not buying
It
calls.
doesn't matter. You do puts and call, it doesn't matter. Butterfly can go both ways.
Yeah, but in this case, this is a bearish bet. So aren't
Yeah,
we?
you can do put. Yeah, put. Yeah, if you do a call, that's not going to be that big of a difference. Because the thing is this, the strategy you're long to, you're short to. Okay. So in this case, yes, it's going to be a put for sure, not calls. For balanced butterfly, it can be either or, doesn't matter. Not for this, not a broken wing butterfly. Broke, if you're bullish, now let's say I wanted to flip this thing back to the upside. Now you say like, okay, I want to go up. You take 567 as your first strike price from this, sell something here in the middle, and then you buy another call up here. And now you're directional more toward the upside. These ones are the best strategies. Why? Because they are the, the theta positive trades. You don't lose any time. You actually making money every day by holding those premiums. At the same time, you're directional. With have some deltas on a trade. Now it depends. Now you just have to see what the premium is on these strikes like this, and then you have to depends and see like how you want to structure the trade. You want to take three contracts, you want to take four, you want to take five. So if you do one, that becomes one minus two plus one. So you have one put, two put, and one put. So you long two, short two. Now you want to say like I want to do five contracts. You'll be five puts, 10 here, and then five puts again. So you have 10 and 10. So you long five against 10 short. You can't, no, 1 week is going to be, sure you can. Yeah, but you just have to look for the expected move for the next week to see how big of a move for a week to structure a trade like that. They're a little bit tricky, so don't get too into these the butterfly. Butterflies are very advanced strategies of options. Okay, and most people don't. There's not, if you even YouTube a broken wind butterfly, I don't think there's any people out there who actually made video or have experience with these trades. But they're very complicated because you structure a trade based on three different prices, three strikes, and then you have to get filled on all three of them at the same time, meaning that your calls and those puts has to line up all at once to give you to get a fill. But they're not as bad filled. You're gonna get filled pretty fast. You know, liquid the stock is, ETF is fast. Faster you're gonna get filled. So you don't get assigned on these ones because the best part is about because they're gonna cancel each other out anyways. And if the price does manage to stay near or close to the center of the butterfly that you have, I mean, the payout is just freaking massive. There's no such a spread will ever pay you much as butterfly will pay you. You can you can turn a 15 $2,000 trade close to over 10 grand. you know, I mean, it's butterflies are very powerful trade, but then and they're the most cheapest trade in the entire option strategy. Just keep that thing in mind. There's no other strategies out there can require as a little and less premium or the come when it comes to a butterfly. Yeah, the max. Yeah, you have to hold it all the way till the end. If you structure a butterfly, let's say, let's say you have a butterfly like this, 567, 553, and 539. Okay. So you set up a butterfly in these three prices. We're right there, 555, near close to the center of the body, right? So your butterfly looks like this. That's the body of the butterfly, which is the center point. That's what you're looking for is to pin the center. It's very, very hard. So you're sitting right here right now, close to the center, right? Because we're 555, the center of the body of the butterfly is the 553. It's only shy of 2 points. So this all depends of how much time do you have, right? Now, if the price stays in between, let's say now you structure this whole thing out because now the price went down, is not going to be that as cheap because the one call that you're going to buy, which is at 567, is going to be deep in the money. Okay. So this spread you need to find out and see what the spread is 567 minus 553. That's 14 to the upside. And then 553 minus 539, that's 14 to the downside. So this is considered as a balanced butterfly. A balanced butterfly, when you have even strikes, 14 up, so you basically long one, short two in the middle, long one, okay? So now you have even strike of 14, 14. So now you sit in here. So if the price stays between here and here, meaning that if the price expires here, is your buyout, is your payout in the end. If the price gets out of this one, okay, out of this range, your trade is gonna get hurt. If the price went out back up above 567, so all the profit that if you're sitting on for the next week, week and a half, is gonna be gone, right? Because it's now basically all the strikes are out of the money now. Okay. What you trying to do, the way butterfly works, what you want to do, you want to bring a first call in the money, and these two right there, strike price is gonna get expired worthless. That's how the actual butterfly works. First call supposed to be goes into the money. Depends how you structure it. Then your center strike, which is already short, they're the ones that are going to decay faster, anyways, right? Because you short those two calls, and the one which is already further out of the money, which already has a lot less extrinsic value because it's way far out of the money, is going to lose. It's losing time much faster, anyways. So the premium that you're collecting is from the out of the money strike, which is way out of the money here, right? Which just decays every day much on a much faster pace. And this is the one that you're already short that is getting hurt the most if the volatility is starting to come off. So this is you have to practice on one or two contract for several weeks or months to fully understand how this thing works, because buying a call up and down, that's not a problem. It's where to center the damn butterfly is the most hardest part in the butterfly. Where is the center? You know, buying a call to the upside and buying one call out of the money is that's not a problem. You can adjust that spread. So this is on this one. So in this case, because if we're looking at 553, so that this costs a lot less as well instead of buying making. If you make a spread right now 553 and 539 or 540, your payout is not going to be that much. I was looking at it yesterday. It just doesn't. I'm not risking freaking $1,000 or $1,500 to make a lot less. Risk reward has to look good. Otherwise, it's just not. There's no point in my trade. So it's 553, 539. So this could consider as a spread. Okay, that's one spread that you can consider just to pick these two strike prices. And to turn into a butterfly, this is 553 versus 539. There's 14 points here between these two prices, right? So you can just you can just buy something here 7 points higher. So 539 minus 7 will be 546. This way will give you a bit more delta. So you're 14 wide to the upside, 7 to the downside. So it's going to have more like a bearish tilt to it, and it's going to give you more deltas, and most likely you're going to be a positive theta. And then you can close this thing anytime you want, but it depends how many deltas you carry. Do you have 100 deltas? Then you gotta have to bump up those number of contracts up. So if you want to do 100, I don't know what the premiums are. Let's say if you do 10, so you'll be long 10, short 20, and long 10. So it'll be you long 2 and you short 20. So if this butterfly works out from here to here or whatever here, you can always close it if you want to book your profits. If it gets down here, fine. This is where you center it toward this low right there. Now, more and more each day that time passes, and if you stay close to your center of the price right there, yeah, if you happen price on the butterfly happen to close near the body of the butterfly, that's where you're gonna hit a jackpot. I mean, it's very hard. If you would ask me of as many years that I've been trading, that how many butterflies that I've ever hit, I had two of them, to be honest. I did two. One was in a Russell 2000 index, and one was in booking.com. Those are only two massive payouts that I've got. I'm kind of sort of lucky. I just gamble it always almost to the end. A lot of if you study or read about these butterflies are really good income. They call income fly as well. Income fly is like it generates income, just like more like a covered calls. But it depends how you structure it. But most of the if you ever come across and start reading about them and stuff, it just people puts out butterflies on indexes, or whatever the some of the stocks that you want to do. They do like 1 month butterflies, and they hold them for like 17 days and they just close it. The average hold time on a butterfly is 17 days. Okay, the 17 days they're looking to make 10%, you know, return, and they just make another one and just keep making like this. They call income fly. So I mean, it's all depends. You gotta have to find stocks. Um, if you want to practice one or two contract just to kind of play around, I can give you these kind of a zones on any stock that you're interested in. Just structure a butterfly right there in the middle. Let's see how it plays out. That's how you practice them. Just pick exactly the same strike prices, what it shows right there on the line, and let the price breathe for week and a half. Yeah, the balanced butterflies are good, but if you get a flush out, I mean, it can just you can get hurt. That's why I like to tilt it just a little bit. In case if the price does manage to slip through, you at least your downside is capped. But if the price does come back down, let's say to hit the 546, so now you're all of these three strikes are in the money now, right? Because now the price went from here all the way, so you're 553 in the money, 539 is in the money, and 546 is in the money. So if all the strikes goes into the money, so your downside is capped. That's the most you can make. Now, if you have time, right? And if you think like, okay, if the bounce will come back toward the 540 and the price can expire there, the whole butterfly is going to change upside down into a huge payout. Yeah, your jackpot is your center strike. That's it. More closer and closer. You can get close to your body of the butterfly by the time of expiration. Yeah, it's not easy though. Don't get too excited. It's very hard because you don't know where the price is gonna stop. 2 weeks or 3 weeks or a month from now. You simply don't know. There's not a person can tell you the market is gonna trade open and close on Monday, and you trying to structure a trade thinking the price is gonna stop at 540 from 1 month from now. Okay, good luck. I wish that's the case. That would be
So Mo, can I throw in a new perspective?
one.
There is a chart pattern, M pattern, and then the S&P 500 formed the M pattern at the top, and now the midpoints between the all-time high and the midpoint between all-time high and 52-week low, it's sitting like 567, right? So the height of the all-time high, between the all-time high and uh, the bottom of the M top, which is 567, the downside maximum for the M pattern is the same height from the bottom of the M, which is 567, which leads to the 517. And that is like, 15.69% down from all-time high. So that sounds like possible.
Which you talking about spy?
Yeah, I'm looking at this chart right now. So
Which one? Spy?
yeah, I was looking at the SPY.
Okay. We were there.
Yep.
You
So
trying to
I'm
okay.
talking about the height of the green line, green dots, and the first blue dots line,
Okay.
567, right?
Yeah.
Height between the, green dots and the blue line, blue dot line.
Hmm.
You know, if you deduct the height from
Okay. Okay. That's gonna be
7, you
huge.
get about 517. So that is
46.
one of the, chart pattern analysis that when the M shape top forms,
Mm-hmm.
you know, it is possible that the stock is going to go down to the same height from the bottom of the M.
That's 40. That's
This is
46.
about 517, I think.
Oh, well, this okay. Let's do it. So if you're talking about if you're talking about 613 to 567, that's a 46 points.
Yeah.
So from
So
40,
deduct 46 from a 567.
oh, okay. The best way you have to look at ATR. ATR is going to give you a much better idea on a weekly basis. Look in the average true range.
Yeah, I'm talking about this M pattern top, some of the chartists use this. And then, remember that the Celsius drink,
Oh yeah.
Celsius, it formed M pattern and it actually hit lower than the height, you know, below the height of um, the M. So,
Let's see. I mean, there's NVIDIA right there not doing anything. Some of these ones that I'll just show you. Hey, like this is nothing. 4 weeks. NVIDIA is right in between. Like, see, like you can, save these prints here, and you can try yourself to make. I mean, if you want to. If don't, you don't have to. Just to structure some butterfly trades into these zones right there. I mean, Apple here. But now, I mean, anything you're gonna make, but keep in mind, like earnings are coming up. So you gotta have to calculate that time when they report earnings. It's just to um, when some of these bounces are really, really good. Somewhere like how the the point is that, well, nobody knows where the high is. The point is like that the price eventually makes a mean reversion toward the midpoint at some point. Okay. That's what I see it. And we can take a lot of examples for now on a certain stocks that we could see that you know like Netflix right now, like it's $800. Okay, it's 933. So your upside risk is what, all-time high to this. The point is like I think it will eventually comes back down to the mid. But Meta is right there. Meta closed the week as well with the outside weekly, but look, it's like so many of them this week. Look what Meta is doing. It's crazy. One of the strongest stocks closed the week with the outside weekly, but Meta doesn't have a single higher bar for 3, 4, 5, 6 weeks now. Over a month and a half. You see the mean reversion. That's how I made this thing. I was like, I want to see where the midpoint is. Okay. And and then every time when the price do go and hit new 52 weeks high, where is the mean reversion? So it's just something that I'm been watching really closely since last week, since I did this one. See right there with Tesla. Tesla's gonna hit 313. Well, I don't know when, but it will hit. That's how I see it. You know, I mean, running fibs and all that. I mean, I had that spread. I mean, yeah, the other leaps, so that's fine. But at least I closed the spread right there at 291. The high was 292 on this one. Crazy. Like it it closed the week last week with an inside week. The inside week with the bullish hammer. Like the look of the candle is a bullish hammer, but it considered as a the it was inside week. And then we did manage to bounce, went up to 292. The 292, how I got, because how I got to a 291 fib. The 291 fib on a 1 hour swing, that's what I mostly watch most of the time anyways. So the 1 hour, that's a 261.8 fib extension. I was like, on a 1 hour, I was like, I don't think you are gonna break 261.8 that easily, you know? And I was like, I'm cashing out. So it's right there. So that's the move. And whatever the trade plays out, that's fine. This trade right there can go both ways. What I mean by that is this could be a third wave, just 3 versus 1. The 3 versus 1 off the low from 217, 5 up, 3 down. 3 versus 1 was at 161.8 at 282. So 282 was hit here at that time, anyways. And backed off, came back down in 4, up in 5. So this could be a 3 versus 1 between 282 and 299 to 200%. And from here, we're looking down back toward the fourth wave. Now the fourth wave here is toward this zone, 38.2. So 23.6 already went down. 263 we closed whatever 260 yesterday. Yeah, 260 was a low yesterday. Well, let's see how it opens Monday. 257.59 is the 100% relationship of wave 2. Okay, so which is right there, 257. 50% retracement of this entire move up from the low is 254. Invalidation for this wave 4 will be at 251. You don't want to see the fourth wave retrace below the original wave 1 high. So this can make, you can make a case here for a fourth wave in this zone against this invalidation. Okay, the price needs to stay here. Or the second thing we can do is the same, is we could definitely look at this as a 5-way move. 2, 3. This can be done as well easily. Put 1 here, then make this thing as a 2. Then we'll look for a third to the upside. Okay, both ways are right. So if this is the first initial decline of Tesla as a corrective wave against the 5, so this would be an A, there's some sort of a B, and then gives you some sort of a C. That's the C can come down here more. That doesn't matter because you don't have invalidation here. That because you're already counting 5 like this to put 1, and then you look for 3 to put 2. The second retracement, then you have to go all the way down off the lows to find those retracements right there, because you're using these lows right there. So you look for 38.2 to 50% retracement. Let's see what that shows right there. See, but 38.260. Look at the bottom. Damn. Tesla works good, man. You just gotta have to find the damn thing right. See, 262 low here, 262, 262 low here. So this zone, so it doesn't matter for wave 2 or wave 4. They both kind of line up here at the same time. So this zone right there needs to hold. Either in a fourth or it's going to go in a second. It's to make a move either up in a fifth wave or it's going to start slow toward this 295 and 325. The 295 we have not tested. This one is actually all the way from the all-time high for down to 217. The 50% retracement is 325 from the highs down to 217 low. So 325. Now if we go back here toward this area, see our midpoint here is 313. So the 313 here I mean, race is a little bit shy, a couple points below the 50. Okay. So some guys are, I mean, who are looking for half the retracements are basically was 50%. So that's what you're looking for, that print for the for half the recovery of the initial decline. But looking at here, that's the but anything downside we don't know. I mean, we'll see what happens. But a bullish trade for Tesla to the upside, I don't know how much time you're gonna buy. I mean, we'll go with these two strikes right there. Pick something like 315. Instead of making 355, you can do 350. Make a call spread. That's the bullish spread to the upside. I don't know what the premium is gonna be, what the payout will be. So Tesla we watch every day anyway, so Nvidia down to 105 before, got a very nice bounce back up toward here. Now it's just Nvidia just ugly, man. It just I don't know what do you call this. Just that's just the weeks and weeks. I love weekly time frames, to be honest, if you would ask me. It just gives you such a like clear read on a price. I understand it's a lot of time, you know, and because it's 1 week or only for a one single candle or a bar, whatever you follow, but it just gives you a much better read, on a price. It's just like as soon as you go down into a smaller time frame and like this nightmare, it just keep changing on like foot four here, one, two, it's just like it just gets annoying. It just like starting to get on my nerves, like, just like really like wanna you can find your highs and lows and that's all it is, but then you can just always look for your liquidity or buy side liquidity or whatever you wanna supply, demand, or just anything you wanna whatever you wanna look for. I mean, in the video right there, there's those Ichimoku clouds. I don't know how to read all these lines, but we're just sitting right there, top of the cloud. Let's look at some of these. Freedom medicine. He looks like, oh, come on, man. Looks like freaking bearish. That's COVID. That's 2022. Yeah, it's this area is gonna, yeah, your real bear market is gonna start if I mean, if you look at the cloud, you see like here it changes to green from it. I don't know. You have to. I don't know if somebody know how to read all these clouds. There's some this Tinkan period and Kejun and Span and Kumu and this Chiku and crazy names. They have a lot of stuff. I don't know. You can adjust them as well. Depends what settings do you use. It's nine and any settings you're gonna change. You see the line moves. So span B and but just a visual look. to look at the price by on a based on a default settings because settings can be changed. You can change all this. It's just I don't know. I mean, doesn't look bearish to me at all. Some of these clouds they really give you a very nice support as well. Been noticing that. See Amazon right there in the middle. This is crazy. Google. Look at the outside bar Google put. Look at the outside bar on the top of Google. Look at us Google every day, every week. 1, 2, 3, 4, 5, 6, 7, 8. 8 weeks, 2 months. Google even had a single higher bar. I bought 50 shares at 165, now freaking 154. It's okay. This is a cheap stock. This is a cheap stock. I think it's the best stock to own is the Google. It's just gotta wait it out and see how it plays. I haven't 7 straight weeks of lower lows. 3, 6, 7, 8. I mean, basically started here. You see, I'm telling, just gotta pay attention to this blue bar. I told you so many times. Every time you see right here, boom. Yeah, every time on these bars they turn, they like if you had a huge run, and in these bars they engulf up on the top. Yeah, they're a lot of time they're gonna form a top. Google definitely a bit under pressure, but we'll see. What he did in Netflix. What else we have? Oh, Microsoft nerd. See, that's a problem right there. Very weak stock. Actually getting out of the cloud. Yeah, I wouldn't touch Microsoft. Really. Dead money. This is a dead money right now. What this stock has been doing since last year, since the July high right there, is Apple is much better. It's stronger. So we did all of them, right? We did Meta. We did Amazon. Yeah. Yeah, you Bell and here if you strong. I mean, stock is definitely strong. There's no doubt. See, look right there. The very tricky bars. Let's run a scan here and see how many are from an outside bar this week, weekly. So S&P this, let's do this thing to a week. Let's see how many stocks in S&P 500. Oh, jeez, 108 stocks. 108 stocks had made engulfing candles this week. Wow, that's a big number of stocks. Okay, just into a week candle. Let me just color this thing into a swing here. They're all gonna be these blue ones. Dude, this is a disaster. This company is this Aglian Technology? A? Wow. This is I don't know what some people are waiting for. He should. You look at search that thing. If it should have it. Um, yeah, go to a Thinkorswim into this. I don't know studies. I believe. Yeah, studies. Put Ichimoku Cloud. I think I don't know how you spell that damn thing. Um, try Ichimoku Cloud. It should have. I don't have my platform up. Yeah, they do. You see, Ichimoku Cloud, the technical indicator used for a forecast price action identified trends comprising 5 plots, including Senku span A and B, which are projected 26 bars forward by default. Yeah, see, some of them you can do. Yeah, they do. Thinkorswim strategy of.
Hi, my name is Pete Hahn, and Thinkorswim scan Ichimoku.
Yeah, they
Type
have.
right now is set to cloud break.
Yeah,
And confirmation required is set to yes. So you've got a couple of parameters. I'll show you how to adjust those. There's also a parabolic
so you can, whatever, you can. I don't know much about them. You're gonna have to sit and learn. I'm not. I'm always, you know, goofing around. Hey, see, like, just pay attention to these weeks of decline that these stocks have. I mean, I don't know what to me is just. I think this is a recession, to be honest, because you don't get to see 7, 8 weeks of decline on these stocks. Just look out. Like, when was the last time you actually see the green bars? A green weekly bar, analog. Like, there's so many. All of these stocks, Arista Network, they all close with an outside weekly bar. It's a lot of them. It's a huge number. So I'm really curious to see John Deere outside week deck. Look at this. Stock cuts in half. One, two, three, 4, 5, 6, 7, 8, 9. 9 weeks. Deck outdoor. Crazy. And how many months it took for the price to go back up and look. 9 weeks. Full washout. Dell. We can do the same thing here. Where's some of these stocks we can do with this. All the way down there. You see Disney sitting right there. Let's go to the Ford, Freeport, Corning. Did good last year on these, just straight remember. GLW. I like this one. Watching 43. I'm gonna buy this again. General Motors. Jeez. Terrible. Google, of course, we just looked that up. Goldman Sachs. KLA. Lululemon. Look at that. Wow. Crazy rejection right there at the 348 mark, huh? Meta. So Google and Meta both closed, made an outside weekly bar. Those are communication stocks. Morgan Stanley. Crazy. Microsoft. You see, Microsoft, Meta, and Google. ServiceNow. Another one. See, if you pay attention to this bar, what happens is that most of the time they end up making the next week low and then they move up. That's just why I'm saying is it's like I think the next week for the market is gonna be down, but it's gonna reverse. I just have a feeling. I don't know. I could be wrong, but that's how I see it. What is this? NetApp, Oracle. See, they're all Palo Alto. What else? PayPal, QCOM, Ralph Lauren, Starbucks, SMCI. See, a lot of these stocks are just crazy. Zebra right there. Oh boy. Texas Instrument. Just these are all of them are. So a lot. So how many stocks closed higher bar scan we can do for the week? 235 stocks made a new weekly high out of 500. So 235 and then 105, I believe, was the outside bar. That's 340. So the 340 and then the rest of them are all lower bars. So if we go back to the lower bar scan, 114. So these are the stocks that made a lower weekly bar, the close with the red bar. Ah, I don't know. We'll see. Because if I use this one really, I mean, I watch them every day. Um, this is the center grid of this time box is where we had this bounce, and and this is exactly the low that we had our finger crossed that it closed at 55.80, and the low is 55.04. We'll see if the center grid is willing to give up. So the next down, this line is gonna be somewhere around this 54 kind of area right there. You see, depends where it hits it. What where that it hits it. If we go right to the center, at 54.33. And some of these lines, you look at this, you see right there, look at the top. Some of these lines are just, this is a crazy box. You do these forward angles and stuff. And do, yeah, I don't want to do 8. It's gonna make it very messy. 8 diagonals. These are the boxes. Forward angles. I mean, 2 and 4 is the way to go. Eight division is just too big. Two standard deviation move is just way more than enough. Well, growth is done in the toilet. 8.83%. S&P 4.90. Value 0.62. Rotation or the growth and value. It was heading toward north, but now it's losing momentum. So the point is it is gonna come back down and then go. Well, eventually it's gonna complete the rotation anyways. So sitting and improving. It has some it's tough to fight the upside and when the swings are down. That's the only thing that I've learned in um like you have a low. I'm sure that like you place a trade and if you manage to get a decent day, right? I mean, you're of course your payout is there on your trade, but to position yourself for like weeks and months ahead on a downswing is just it's tough, because the swings are down. I mean, that's the way you have to look at that way. They just don't want to give like how like perfect some of these like you have two higher highs. And I was like sitting and watching. I was like, okay, we're there. Let's print. And look where it stops. Look at the high of this day, 5, which was Tuesday. Okay. 576.41. Look at the high of Wednesday. 576.33. But then as soon as it break below this low of Tuesday, about turned red. That's it. Day's over. How these algos work sometimes, this just amazed. Like it's something to watch, to be honest. It's like if you actually watch the prints on them, you just be like, what does like really like how perfect they can stop a price and just not let to print a high above the previous day. Look at here. 570.95, 570.57. Tell me about it. That's crazy. Same thing here in Qs, 493.62 to 493.16. Because as soon as you're gonna hit that print, your bar is gonna turn green. And just once it goes green, it's just gonna stay green. It can only engulf then. It's not gonna go red anymore. I don't know. It's easier to project the upside, play the upside when this down line right there that is coming down is starting to appear to turn like this, like something like this. See? Then you can have days of rally to the upside. That happens when you're gonna have three bars to the upside. Now this turned down yesterday. So once the turn, I mean, it's gonna take some time again. Once you turn, when the swing turns down, it doesn't instantly go right back up either. So keep just that's another thing too. you know. So market is just I don't know. I mean, hey, I mean, if everybody's looking for a bargain price and wants to buy something low, and when the low is coming, then everybody they're like, oh no, I don't think it's that low. There's more weakness coming. There's always you always have these doubts in your head. Like, but some of these lows that's gonna put them on, you're not gonna even see them for months. And then we're thinking like, man, we should have bought him something at the low right there, and now we're sitting right down here. Just never know. Don't Your upside is always gonna be more than your downside anyways. But the downside is the one is just cause a damage. Yeah, I just wanna really looking for this where that went. Did it close this one? Uh I can go back. Yeah, I'm looking for this one to see what happens. This part definitely didn't play out for sure because the first half was weak, and I guess we could call that 5% bounce or whatever that we just had, the market had this one off the low. We could make the case of this move right there, not this. So basically, you're talking this portion right there, this move. And now this one right there is is going, it's making the full reversal back to the downside. What was the other? The quarterly one? No, yeah, no. This one I can change. Let me see. Let me change this to April because the month is almost done. So this stays as is. I didn't change anything. April. But if we look at April and we don't know, it is brutal. 2 months in a row. Okay, let's look at Netflix first. We gotta now remember all these stocks gonna go through the earnings. So I mean, consider seasonality along with earnings. Because right now, if we look at the April earnings, the earnings are looking promising based on the seasonality, right? That's the only thing. Because if we go back to to the time frame, earnings season will start somewhere around here. Because this part right there, we're gonna have job report, CPI, and a PPI, and his stupid tweets every day. So those are all here in April. Then right there is where we're looking for earnings to kick in. Financial is always going to be first one. That is what we could consider for April to print up. Now the question is, second is when all his stupid tariffs is gonna come into effect. Is the market right now is pricing in those tariffs? Because markets are forward looking. Is this is when the market is literally gonna take off? That would be something. If these tariffs start, if these tariffs getting baked into the market, and the second comes and the market's starting to go in the opposite direction, I mean, it's gonna flush out a lot of puts. So we'll see what happens. But downswings are definitely not fun. That's for sure. So anything you trade, I would highly recommend you just don't size up the trade. Just wait. As soon as the swing is gonna turn up, I'll tell you, and so I'm gonna can load some bazookas. Microsoft. Gee, man, this ugly chart. Amazon. Amazon last month was 1582. This month 1151. Previous one was 1212. Man, this is crazy moves to be honest. Look at it. Apple 14.59. 14.59. We don't see any 14 here. One single month. Ah, Nvidia is very messy. Oh boy. Yeah, I need to stay away from Nvidia this month. It's an ugly seasonality. Google is good. 90, man, it's some extreme ranges. 14.9, 14. Tesla. Well, looks decent. Oh, you see, resistance is right there, and Tesla is right there, 273. I mean, it made 29. What was the high? 292? Oh no, sorry, this is the monthly. Never mind. Yeah, 273. Yeah, we made it to where we went? 291. Then we backed off. Well, the month is gonna be these. It's just a matter of close. I mean, this is the lower bar anyways for the month. Google is a lower bar. Nvidia is a lower bar. Apple is a lower bar. Amazon is a lower bar. Microsoft is a lower bar. S&P has a lower bar. Meta has a lower bar. Netflix had a lower bar. So every single one of these monthly bars were lower for March. Consumer discretionary lower bar, technology lower, industrial lower, communication lower, material lower, real estate engulf, engulfing bar, made an outside bar, financials outside bar. So you made a high and a low. Consumer discretionary higher bar, barely made it above the previous month low. Utilities lower bar. Healthcare outside bar. Energy outside bar. Change this thing to color this. See the blue one? Healthcare blue, utilities red, consumer green, financials blue, real estate blue, material communication, industrial technology, consumer discretionary. Consumer discretionary is down for 3 months in a row. Last time it was down 3 months in a row here. Was up 13% to the outside next month. I don't know. Something's gonna happen next month. With these, I think these tariffs are just market just getting too ahead of itself over these tariffs. This was this was 2022, the bear market. So that time the sector was down for three. Then the next month it put an outside reversal bar. Three here, huge pop. Three here, higher bar. 18.85% move. Yeah, ETFs don't go down for too long. Just keep that thing in mind. No, you don't see ETFs are down 30%. And these are not stocks. They're tracking all of these stocks here, plus hundreds of others. The technology, outside bar, lower bar. Now they punish technology in Q1 for sure. They're just bringing everything back to the mean reversion right into the earnings. And they're going to wait for these companies to report earnings and let's see what they have to say. That's how I see it, you know. And these tech companies are not like, I mean, the only thing they do is just, it depends. I mean, Nvidia is different, but rest of them are ad revenues or selling. Mm. I don't know. I mean, what? So here's XLK. So, I mean, this is the 2025 going so far. for for technology right there. Um, this is here. This is consumer discretion. Okay, consumer discretionary is right here. Then here's your technology. Industrial, communication, material, real estate, financials. They're all down, I mean, except energy. Energy has 3 months. Energy is April is pretty good for April. I mean, if you look at April, the top ones, they're up there, except for real estate. Look at this material. Communication is okay, not as strong as January. Industrial, strong month. Technology, yeah, it's okay. This is strong. This is where we have Amazon and Tesla. Something to come on. I gotta fit them in here. Let's see it. Oh, because this. Okay. I don't know what the story is. He's weakening up the market or interest or doesn't want to pay this and this and that. It's just doing it on purpose. Wants to put this much tariffs, and 2 hours later he wants to negotiate and he wants to talk. I mean, like, what are you even doing? Like, I don't know. This guy, I don't know if you guys, I think she posted this guy right there, Kobisi Lighter or whatever he does. Literally just popping up on my, I don't know who the person is. From Wednesday to Friday, S&P lost 100 billion per trading hour for a total of 2 trillion. Then after the market closed on Friday, S&P future reached another 120 billion in minutes. What happened? Let us explain. Okay. Let's begin with a brief timeline. The S&P 500 bottomed on March 13th, 5505. President of terror headline. This through March 26th, tariff headlines were minimum and S&P rose 5%, which we already looked at, right? 10 to 5. However, as soon as 25% auto tariff arose, the rally was undone. As the relief rally gained momentum, market developed this narrative that tariff uncertainty has peaked. This was a key misconception leading into a last week decline. As a result, the risk appetite rebounded and a bull trap was formed. Sentiment is highly polarized. Polarization of sentiment has sent shockwaves through the economy. Producers are panicking and front runners tariffs. The US just posted a 2 month trade deficit of 301 billion, which we have really ever seen a 2 month trade deficit even half as large as a clear sign of panic. Then on Friday, core PCE inflation came in hard, rising to an annual rate of 2.8% from the initial reported 2.6 in January. To make things worse, January core PCE number was revised up to 2.7. This is exactly when the equity market decline began to accelerate. Oh, because they did the revision. It was not the initial price. That's why the market got shaken out yesterday because after the revision they did. I didn't notice the revision yesterday. I just only looked at the print when it came. You see it initially. Because market can take the front data, but then the revision, you just bumping the number up, even making it even more worst. This is exactly when the equity market decline began to accelerate. Below is an alert we posted at 9:34 Eastern, March 26 for our members. We took short and noted the market certainty was a mispriced. Came in 200 point reverse the beginning of March, gain of 500 points. But I don't know, it's some manipulated data, man. Seriously. Take all the imports. Atlanta Fed now see GDP contraction for the first time since 2022. If the economy is slowing, inflation is rising, the Fed higher rates for no longer strategy is dead. We're not entering a period of stagflation as GDP contracts and inflation rises. Consumption of tariffs last week drove heading to a reciprocal tariff week and market expectancy to decline up to the happen. Dude, this guy like what write a whole fucking novel or something? I mean, very detailed what he sees it. I mean, I didn't know that that. See, I missed this one. I didn't know they did the revision yesterday because I got that print. I think I posted as well when we got that print. Huh. Okay. All right, let's. I don't know. Do you have any questions?